All right, so let's talk about short-term home health care insurance. These are the states that the product is currently available in. We're trying to get more state approval, but these are the states right here that it's currently available in. Here you can see a map, a little better visualization. Now, just so you know, the policyholders may use their coverage anywhere in the United States. In the last 2 years, GTL has paid out over $80 million in claims between our cancer and our hospital indemnity plan. The reason why I share this information with you, and feel free, anything that you see on the screen today you can share with your clients, but I share this with you so that you understand we pay out a tremendous amount of money to your clients. That's how we make money, is not by not paying out. We make it by paying out, because when we pay out, people buy that much more of our policy, and then we cut a little portion off for ourselves. All right, we're going to spend a minute or two and talk about goals. The reason why I want to talk about goals today is we are all in the business that we're driving ourselves. Every day when you get up, you need to find a way to motivate yourself and drive yourself. People that are goal-orientated, it has been proven, study after study, that people that are goal-orientated have a higher level of success and a higher level of happiness in their lives in general. And overall, isn't that what we're all trying to do, is to be successful and happy? So I'm going to show you this real easy goal program, and I'm going to challenge you for the next 30 days to follow it. After that, you won't even have to be thinking about it. You'll just be doing it automatically because it is so powerful. All right, the goals should be in writing, believable, achievable, measurable, have a deadline, and you need to commit to reading every day. This you might want to take a picture of. Something magical happens when your pen hits the paper and you actually start putting your goals down in writing, okay? People say to me, they go, I need to schedule like a weekend where I head up to the North Woods and in my cabin, and then I'm going to write down my goals. I go, well, you can do that. I said, but what you really need to do is schedule like 10 minutes after this webinar is over with and start writing down your goals. Come up with 5, 6, 7, 8, 9 goals, okay? And you'll be refining them throughout your whole life, but get them on paper right now. We need to make our goals believable, because we all know that anything we believe, we actually can achieve if we put the right effort to it. And we need to make our goals measurable. Like sometimes I'll ask an agent, and I'll say, hey, what's your goal for this year? Or what's your goal for AEP? And for this year, they might say, I want to have a great year. Great, but what would constitute a great year? Okay, let me think about that. You know what? If I made $50,000 more income this year, that would be a great year. Or if I put $100,000 more premium on the books, that would be a great year. Excellent. Now we have something that's measurable, and then we have to put a deadline on each and every one of our goals. And the reason why we have to put a deadline is why, and everybody knows this already, it's because, and myself included, we are all procrastinators. We put things off. So you put a deadline on that puts pressure on it, and now we can't just keep saying, well, yeah, I'll worry about that tomorrow. Nope, you'll start concentrating on it every single day. Okay, last part of the goal program. And see, I told you how easy this goal program is. You need to commit to reading the goals, your goals, every single day. So here's what I do. 2 things. Number 1, before I leave my office every day, I grab a blank sheet of paper and I write down my immediate short-term goals that I want to accomplish tomorrow. I put it in writing. I leave that sheet right on the center of my desk. First thing I see when I come in the morning is my list of goals that I need to accomplish right now that particular day. As I accomplish them, I draw a line through them. More importantly, up on my wall, also on my vanity at home, and on my visor vanity in my car, I have a list of 7 goals that I want to accomplish. Some of them are this year, in the next 3 months, 6 months, 1 year, 2 years, 5 years, lifetime. And narrow it down so that I am always seeing the list of my goals. I've got my finger on it right now on the above my desk here. Okay, that's all I want to talk about, goals. But if you commit to this for 30 days, you will see a substantial difference, especially now with this time of the year as we're getting into open enrollment. All right. Why short-term home health care insurance? So most Americans would prefer to recuperate at home, and that's what this plan is all about, recuperating at home after you've had something that has caused you to either become cognitively impaired, which is brain damage, or so that you are unable to perform, so that you get hurt somehow, so that you are unable to perform at least 2 of the 6 activities of daily living without substantial assistance. If either one of those 2 items happen, you get that certified medical professional to state that. Guess what? You get to start collecting on this plan. Benefits, one thing I wanted to mention here, benefits get paid directly to the policyholder regardless of any other insurance that they have. All right, moving forward. There we go. What does Medicare cover? Skilled nursing on a part-time intermittent basis, home health aid services on a part-time or intermittent basis if needed as support services for skilled care, physical therapy, occupational therapy, and speech-language pathology services, medical social services advised by doctor for emotional and social concerns related to illness. What doesn't Medicare cover? 24-hour-a-day care at home, meals delivered to the home, homemaker services like shopping, cleaning, and laundry when services aren't related to your plan of care, personal care by home health aides like bathing, dressing, and using the bathroom when it is the only care needed. When you combine everything that we do, it is a winning proposition for your clients. Here is how the plan works. There are 4 parts to the plan. 3 of the parts pay your clients money. The other part is access to the Mayo Clinic online where they can get care guidance, which we'll talk about in a little bit. All right, so 4 parts of the plan, 3 levels of coverage. Coverage A, coverage B, and coverage C. Once you pick A coverage, you have that coverage for all 3 of the benefit-paying services. Issue age range from 40 to 85, but once they buy this plan, they can keep it forever. Unisex rates for base plans. Now, you will, the vast majority of the time, sell Plan C because it will give your clients the best coverage. Also happens to give you the best commission because it's got the highest premium. But most importantly, you're going to do it because it gives your clients the best coverage. All right, let's talk about what the plan covers. And remember, if you have a question, type it in and we will get to them. If Jen thinks it's something we need to talk about right away, she'll jump in. Otherwise, we'll cover them at the end. All right. GTL will pay a benefit for each day you receive the following benefits from an approved practitioner up to a daily maximum, which varies by plan. All right. So for Plan A, we will cover these services on the left that get performed in your house. We will pay these dollar amounts for said services, and for Plan A, you can collect up to $150 per day up to for 360 days. Plan B, same services, but double the amount that we will pay. Plan C, which is what you will sell the most of, same services, and these are the dollar amounts that we will pay, and up to $450 per day. So what your client will do is they will try to schedule a couple of services on the same day because we will pay for 360 total days. So if they can double up, they're going to increase their return. All right, home health care aid, which includes, with this plan, this is the second of the 3 parts that pay. Plan A will pay $40 per day for home health care aid. Plan B, $80. Plan C, $120. And we will pay this for 60 days, okay? And then here's the big coup de grace of this plan, the closer right here. We have a prescription drug benefit built in with this plan. We will pay $10 for every generic drug and prescription refill that you get during the course of the policy year, and $25 for every name brand. And Plan C, we will pay up to $600 per year. So here's something to think about. And they get to collect on the prescription drug benefit right away. So they buy this plan tomorrow, and Sunday they go in to get a prescription drug done. Guess what? That will be included in their benefit. We will pay for that. These two items, they have to be cognitively impaired or unable to perform 2 of their 6 ADLs. This one, they get to start collecting right away. Now, if your client, say they're on a drug prescription and it gets filled every 90 days, that means they could collect every 3 months, so they could collect 4 times per year. However, if their doctor changed that 90-day prescription to a 30-day prescription, now they could collect 12 times a year. So you can work the system so that you can help your customer maximize and collect up to $600 per year. And on Plan C, the average plan for like a 65-year-old is about $52 per month, so about $600 per year, so they almost can pay for the cost of the plan. So now your customer will do the math when they see that the premium is only like $52 and they can get $600 back every policy year. They're going to say, well, how can this company even do that? Well, here's your answer, and this is the truth. In that, you understand how so many millions of dollars of gift cards go unused each year? Well, it's the same thing with this type of a plan. Actuarially, and that's a great word to use with your clients, actuarially, Mr. Client, it has been shown that not everybody will apply for this benefit. Now, you, Mr. Customer, you will, because you're very smart and you're going to make sure that you get the maximum value possible. But not everybody's going to do that, and the company takes that into account when they price their premium, and that's why they're able to almost offset the cost of the plan with the prescription drug plan benefit right here for you. All right, hopefully that makes sense to everybody. Moving forward. So, to qualify for benefits, a licensed healthcare practitioner must certify you as having a cognitive impairment, which is brain, or a functional impairment, which is physical, and that's the inability to perform at least 2 of the 6 activities of daily living, ADLs, without substantial assistance. Then you can start having this work done in the home, and we will pay this dollar amount right here, up to $450 per day. The maximum benefit, we already mentioned that, 360 days for the in-home services. Benefits restore once the benefits have not been paid or required for 6 months, 180 consecutive days. When that happens, the plan restores, and now they have 360 days left. Plan A, they can collect $150 per day, which amounts to up to $54,000. Plan B, up to $108,000. And Plan C, 360 times 450, that's $162,000. And remember, this plan on average for Plan C is about $50 per month, give or take. All right? Moving forward. Let's give a quick example. This is a 65-year-old individual. Now, they have Plan A. They suffer a stroke. They get 10 physical therapy sessions done in the home at $75 each we're paying, and they get 10 speech pathology sessions done in their home. Remember, we're paying $75 each, so that's $150 for each day. They get both of these done, let's say. 750 times 10 times two different that they're having done, they would collect $1,500 for just this small amount. All right, and the annual premium for a 65-year-old Plan A is $294. And remember, Plan A pays $300 per year for prescription drug, per policy year for prescription drug. All right. The 4th section of this plan, which is super cool, and that's Ask Mayo Clinic online. So your client is going to get a passcode where they can go on to the Mayo Clinic website, and they will select a symptom. There's over 300 symptoms that they will choose from, and then they will be asked symptom-specific questions, and then they will receive care guidance. So it's kind of like having a doctor or a registered nurse on your computer that you can go to anytime, and it's the Mayo Clinic. Here's how powerful this site is. It is made up with over 30 unique algorithms. Now, an algorithm is when we think of artificial intelligence. In other words, it guides the computer to think kind of like how the brain would think, but 100 times faster and with way more knowledge than the average doctor has, even though they have a tremendous amount. So this is a huge item for your clients, and we want them to take great advantage of this. Hey, they have their grandson over. The grandson falls off the swing and has got a big swollen elbow. Well, what do? Do they run to the emergency room? No. Before you do that, go on to Mayo Clinic online, type it in, boom, boom, boom. All right, all of a sudden they find out, oh, you know what? We need to just start icing it immediately and see if the swelling goes down. Boom. And can he move it, etc. Okay, here's something super powerful about this plan that you guys will love, and that is the underwriting. All right, it is simplified issue. So here are the questions. Is the applicant currently in a nursing home, assisted living facility, or receiving home health care or similar type benefits? If they answer no, we move on. We continue moving forward. Is the applicant unable to perform routine ADLs, bathing, dressing, eating, continence, toiletry, or transferring to or from a bed or chair without physical assistance, or cognitively impaired? Nope. Good. We continue forward. Now, the fact that they can answer no to these two questions means that they will qualify for at least level A or B. If they want level C, which is the $450 per day, they have to answer one more question. In the next 60 days, does the applicant expect to be admitted to a hospital, nursing home, assisted living facility, or require home health care services or have surgery? If the answer is no, guess what? They can now get level C. Pretty powerful, pretty simple to use. Also, something else I want to share with you, which I'll cover in a minute, but I just get so excited about it, and that is that there is a hospital indemnity rider that you can add onto this plan that doesn't add any more qualifying questions. So you can get your client, if you sell them level C, you can get them up to 6 days at $300 per day for hospital indemnity. So if you get a client who you can't sell them our Advantage Plus hospital indemnity plan, guess what? Sell them the short-term home health care, level C, and add the rider onto it. Now, just to clarify, you say, well, then why don't I just sell this with the rider to all my clients? Well, sell this to all your clients, but the people that can qualify for our Advantage Plus, you want them to buy the Advantage Plus because the Advantage Plus is an issue age policy. This policy is an attained age. So the premium will go up every 4 or 5 years. So your client is way better off with our Advantage Plus as long as they can qualify for it. But if they can't, hey, guess what? At least now they can get some type of coverage. Okay. Pre-existing condition limitation. The policy is subject to a 6-month pre-existing condition. Pre-existing conditions are those medical conditions disclosed or not disclosed on the application for which medical advice or treatment was recommended or received from a doctor within 6 months prior to the policy's effective date. Any loss due to a pre-existing condition isn't covered unless the loss begins more than 6 months after the policy's effective date. So, you can sell the plan to somebody today who has a pre-existing condition. They cannot collect on that pre-existing condition until the 7th month. Then they can start collecting at that point forward on that pre-existing condition. All right, moving forward. So let's go over what we cover. These are the benefits. So we will pay, remember, $200 per day for level C for skilled nursing care provided by a registered nurse. General nursing care provided by a practical nurse, LPN, or a licensed vocational nurse, LVN, will pay for physical therapy in the house to help the patient return to maximal function. Speech pathology, work to prevent, assess, diagnose, and treat speech, language, social communication, cognitive communication, and swallowing disorders. Occupational therapy, and that helps patients regain the skills for the job of daily living. Last page of benefits. Chemotherapy specialist. This I found very interesting. Chemotherapy treatment in the home. Yes, they actually do chemotherapy in the home. Enterostomal therapy. Nurses specializing in the management of patients with urinary and fecal diversions, draining wounds and fistulas, fecal and urinary incontinence, and chronic wounds such as pressure ulcers and vascular ulcers. Not a pretty sight, any of this, but so vitally important for your clients that they to be covered so they can get this done. Respirational therapy. The treatment of pulmonary disease such as asthma, emphysema, pneumonia, cardiovascular disorders, and trauma. Medical-social services helps patients with social and emotional concerns related to an illness. All right, here's how the home health care aid benefit works. And that is, for Plan C, we will pay $120 per day for each day you require the services of a home health care aid, depending upon the plan you choose. Plan C will pay $120. Plan B, $80, Plan A, $40. Benefits are payable should you have the inability to perform 2 or more of your ADLs or become cognitively impaired. This is a big one. A prior hospitalization stay is not required, and we will pay this for a period of 60 days. Once it has not been needed for 180 days, guess what? Then it will restore all over again. Pretty powerful. All right. Moving forward, you can collect $2,400 for Plan A. Now, that's in addition to the $54,000 that you can collect for Plan A under the professional services. Plan B, $4,800, $7,200 for Plan C. And that's in addition. All right. Also, now here's the prescription drug benefit. Already went over this, but you want to do it a second time just so that we get it locked in. So we will pay a benefit amount of $10 for each generic or $25 for each brand name prescription drug up to a policy year maximum. Remember, policy year maximum of $300 for Plan A, $600 for Plan B, or $600 for Plan C. This is big, you guys. The prescription drug benefit is not subject to the pre-existing condition limitation and is payable without regard to eligibility for covered home health care services, meaning this portion of their policy they can start collecting on immediately. And as we talked about, Plan C just about offsets the cost of the policy. Same thing with Plan A, but you're, again, way better off to get Plan C for your client. Okay, so now let's remember that this is a policy year plan. So, say your client buys this plan in October. The best way to do it is let them know that, okay, next October, call your pharmacy. You don't even have to save any receipts or anything. Next October, call your pharmacy, have your pharmacy print out all the prescriptions that you have received in the last 12 months. Take that sheet, grab a claim form online, or we can mail you one. Fill it out. It's just a matter of putting the policy number and your name and information on. Send it in to us, and then we will send you a check for $600 if you've had that much in prescription. It makes it real easy for your client to remember to do it if you just have them do it once per year. They can do it every couple months. They can do it every month if they want. But if they have to do it, if you have them do it every month, they're going to get tired of doing it and they will quit doing it. Whereas, kind of like, hey, come April, you get your, hopefully you get an income tax refund back. Guess what? Every October, you're going to get $600. And now they can use that $600 to, they go on a little mini vacation, a little weekend getaway, et cetera, et cetera. All right. Claim example. I'm not even going to give you guys, you can just see this because you all understand exactly how it is. It's pretty clear. $10 for every generic, $25 for every brand name. Every time you get it refilled. If you're getting it filled every 90 days, change that so that it gets filled every 30 days so you can collect more on it. All right. Hospital indemnity rider. This is what I was telling you about. So for Plan C, your client can get up to they can get $100, $200, or $300 per day benefit for every day they're in the hospital for up to either 3 or up to 6 days. And here's something that I'll share with you. So the average client, your average individual, 65 years or older, when they go into the hospital, how many days do you think on average they are in the hospital? and you can ask this of your client. Most people, myself included, when it was first brought forward to me, I said, well, probably 2 to 3. The real number is 5.6 days. So round that downward, 5 days. So somebody goes into the hospital, they've got a Medicare Advantage plan, and they're responsible, let's say, for $300 per day. They're in for 5 days. They have to come up with $1,500 right out of their own pocket or out of their own bank account. This plan right here, they can get 6 days of coverage, $300 per day, at about $25 per month. So it will run them about $300 per year for this rider. So if they're in the hospital, if they go in the hospital every 4 years and they're in for 5 days, but they only go in once in 4 years, they're already ahead of the ballgame. That's how powerful it is. And this benefit period, it restores after 60 days of no hospital confinement. So they collect on the plan, then they're out of the hospital for 60 days. Now the plan reloads all over again to 6 days if that's the benefit that they chose. Unlimited number of benefit restorations. Now remember, policyholder and premium rates are based on attained age, so they will increase about every 4 or 5 years. All right, moving forward, you have an ambulance rider. I suggest that you put this on every single policy you sell. Here's how it works. We will pay $200 for an ambulance ride to or from a medical facility. They can collect up to 4 times per year, up to $2,500 total. No hospital admittance is required. And the reason why I say put this on automatically, it runs about $4 per month, so about $50 per year. So if they if they use an ambulance once every 4 years, they're ahead of the ballgame. And we know as they get older, they're going to use the frequency of using an ambulance will increase dramatically. We also have a critical accident rider, and we have a dental and vision rider. This is a powerful rider. I'm going to blast through this, but to give you a very good idea of how it works. $1,200 is the dollar amount that you will sell your clients. Forget about the $400 or the $800. The $1,200 is by far the best value for your client. So during year number 1, we will pay them up to $75 after they've had the plan for 3 months when they get a dental exam done. We will pay them up to $50 for one basic eye exam. And the way that works is we will pay them 80% of the actual charges, not the usual and customary charges. In other words, so we're going to pay a lot more than usual and customary charges. 80% of actual charges and up to $75. Now, the very first year, they can collect up to 50% of the benefit amount. So they could collect $600 on this plan. In year number 2, after the calendar year $100 deductible, which I'll explain this in a moment, is satisfied, we will pay 80% of actual charges up to 100%. So they can collect $1,200 every year after that. Now, for this benefit here, the dental preventative and the eye exam, they do not have to pay that first $100. For fillings and everything, they pay $100 once per year, and then they're completely covered. All right. In addition, here's something that's powerful. After they've had this plan for 6 months, all right, so now we will cover fillings or root canal, but most importantly, and this is what I want you to understand, we will pay $200 for prescription eyewear or contacts after 6 months. And this $200, like the $75 for the dental and the $50 for the eye exam, you do not have that $100 deductible. That one-time deductible does not apply. So your client can collect $200 after 6 months, and going back here, let's get this to go, 75 after 3, 50 after 3, so that's 125 plus the 200. They can collect $325 after only 6 months with this plan, and that means every year they can collect $325, and the whole plan itself is going to run them about $400 per year. Now let's show what else it covers. After 12 months, we will cover bridges, crowns, full or partials, dentures, treatment relating to the replacement of natural teeth, outpatient dental surgery, full mouth extractions, or fluoride treatments. And it's important for you guys to understand, if existing bridges or dentures need repair or replacement due to an injury or accident, The 12-month period does not apply. They can buy this plan today. Next week they fall down and break a denture due to an accident or injury, and it would be covered. All right, moving forward. Take a look at the time. All right, we're going to really fly through this. Not going to spend any time on rates. The rates are super reasonable, and it makes sense when you show them to your client. They'll be like, good. All right, setting an appointment. We're just going to blast through this. Super important, whenever you're setting appointments this time of the year, take just a minute to do a warm-up once the client answers. Let's not get right into the reason for the call. Let's do a warm-up and just be friendly with them, set the appointment, and then we don't really have to make sure they qualify anymore because you've got the simplified issue, short-term home health care plan. And then when we're all done, whether it's a meeting with the client or on the phone, let's remember the importance of a warm down. You guys are all professionals, great at what you do, but sometimes we just kind of get so busy we forget to do the warm down. And the warm down is so easy to do. Put all the papers aside or the phone and just say to your client, hey, what do you have planned, Bob, for the rest of the day? Mary, what are you doing the rest of the day? And get them talking about it for a little bit. All right. Let's applying for coverage is super easy to do. And filing a claim, very easy. We're not going to cover all this because of time. I want to make sure we get some time with critical cash. All right, so critical cash.
Michael, before you go on, since I do have a few questions on the home health care, I thought it would be a good time to interject. I did answer a couple of these, but I think it's important. One question was, how does the prescription plan work with Medicare Part D?
Okay, so I need to take a sip of water there. So here's how it works. As long as you can show that you received the drug, it does not matter what you've paid for it. As long as you can show that you've received that prescription, we're going to pay you. You could be with the VA, for instance, where you're paying zero. As long as you can show us that you received that prescription, you're going to get paid by us. Does that answer that question?
Yes, and that was the second question. It was you're going to pay 10 and 25 regardless of how much they paid for it. So
yes, that is absolutely correct. Yes.
Perfect. Okay. Perfect. And the next one is, will this plan be in Florida ever?
Well, here's our answer to that. We would love this plan to be in every single state. And when you think about it, why would a state not allow the plan to go into their state? But when you're dealing with departments of insurance, and we love them, I want to go on record that we love all departments of insurance, state departments of insurance. Sometimes you just can't make rhyme or reason of why they would not allow a plan. We're trying to get into Florida, but Florida's a very, very difficult state. So nothing that's on the near horizon.
Okay, great. Final question is it required to pay premium while on claim?
It is.
So do you continue paying your premium?
It is, yes. Mm-hmm. Good.
Okay.
All right,
with that, that's all I had for the home health care. Let's let you move on.
Beautiful. Okay, critical cash. And this is a pretty simple, straightforward plan, and it is designed so that if you have if you get cancer in situ, a stroke, heart attack, coronary artery bypass surgery, Alzheimer's disease, kidney failure, major organ transplant, paralysis, or coma, we are going to pay you from $500 to $600 per month up to 24 months, depending upon what length of time you chose. You can choose 6, 12, 18, or 24 months. Now, I do want to state, and we'll show you this, but if you get cancer in situ, heart attack, and coma, those are limited to 3 months, and coronary artery bypass surgery is 2 months. But everything else will be whatever amount you choose, and you're going to get paid by us monthly. So you choose a benefit of $3,000 per month. Say you're 65 years old, that will run about $150 per month, and you can collect on that. We'll pay you that for 24 months, and we'll pay you that whether you've recovered or not. In other words, once that incident happens, then you're automatically eligible for the full length of benefits. Now, what you could also do is you can choose when you buy the plan, instead of getting paid over a $3,000 per month, for my example, for 24 months, you can choose to get paid 3,000 times 24, which would be 72,000. You can choose to get paid that one time up front. But we find that people, if they get paid money up front, it doesn't last. And that's why we have this option where they will get paid over 24 months or over 6 months, 12 months, 18 or 24 months. So, okay. That's kind of the plan in a nutshell, but now let's just look at it in more detail. These are the states that we have this plan available in. So here's some trends. More than 75% of healthy individuals over the age of 40 will become critically ill at some point, and that's according to Healthcare Reform magazine. This is information selling points when you're talking to your client. 1 in 2 men will be diagnosed with cancer, and we also know that fact is 1 in 3 women will be diagnosed. Every 40 seconds, someone in the United States has a stroke. It's the leading cause of serious long-term disability. In 2010, an estimated 785,000 Americans had their first heart attack. 1 in 8 older Americans has Alzheimer's, and this covers against Alzheimer's. 43% over the age of 85 have Alzheimer's, and that's according to the Alzheimer's Association, which is a scary number. Some more stats. About 3 of every 5 personal bankruptcies in the U.S. are a direct result of the overwhelming medical expenses that occur. 79% of these people have traditional health insurance, but still had to file bankruptcy. Expenses not covered by traditional health insurance, medical deductibles and copays, household expenses, experimental treatments, lost income, which is huge, lodging and transportation, assisted living, and nursing home care. That's why this plan can be so effective for your clients. Average cost for a private 1-bedroom apartment in an assisted living residence, it's over $3,000 per month. Here's the plan. So you have 3 choices of coverage. We have the comprehensive, cancer care, and cardiac care plus. Most comprehensive plan, obviously, Plan A, and it will cover everything that you see down the left-hand column. Plan B, which is called Cancer Care Plus, it will cover everything that you see in the middle column. In other words, it's the cancer and the Alzheimer's, kidney, major organ, paralysis, and coma, but we're taking out the heart attack and stroke. Plan C, Cardiac Care, takes out the cancer, and it covers everything that you see on the right-hand column. Alzheimer's, strokes, and cancer represent over 70% of long-term care claims. So, first thing you choose is which plan do you want to go with. So in this instance, let's say that they go with Plan A, all right? Second thing they do then is they choose their benefit amount. What's their monthly benefit amount? $500 to $6,000 in $250 increments. So I ran one of these quotes earlier, so we're going to go right down the middle. We're going to choose a $3,000 benefit. And this individual, I used my age, I'm 58, so this individual is 58. They choose Plan A, the comprehensive, where it covers it all. They choose $3,000, and then step 3, you choose the monthly benefit period. So 6 months, 12 months, 18, or 24. We're choosing 24 months in this case. So the client would be paid $3,000 for 24 months. And benefit period defines the length of time client receives a monthly base. As recovery times vary, some covered conditions have limited benefits. Remember I mentioned this earlier. So the benefit period for cancer in situ, heart attack, and coma is 3 months. Benefit period for coronary artery bypass surgery is 2 months. Once diagnosed for a condition, now you qualify for the full benefit period. If you pass away, guess what? Payments continue, okay, to your beneficiary. If you recover, guess what? Payments continue. So in other words, you buy this 24-month plan, which for a 58-year-old, $3,000 of coverage for Plan A will run about $150 per month. And so it would pay $3,000 for 24 months. It's very easy to quote this plan. Just go to our website and you can pull everything up from there. Are there any questions on the critical cash? All right, moving forward. We just got about 3-4 minutes. I want to share a couple more things with you and some tips. So these are just pictures of the login screen, how easy it is to use. That's a whole nother webinar showing you exactly how to do it, but it's super easy to use, whether it be on the Apple, your iPad, Android, or off your laptop, or you can do paper apps. We don't care. Here's something you might want to take a picture of. This is a declination of coverage form that I put together. Somebody had given me the idea, and so then I put it together using Word. I would suggest that you make some of these up, make copies of them, and keep them with you so that when you offer a client any policy at all and they choose not to buy it from you, pull out your declination of coverage form, give it to them with a pen, and say, John, I need you to fill this out. So if you'll put your name, John Smith, right there, and I, John Smith, do hereby state that I was offered, and then John, if you'll put Advantage Plus, and then put my name here by Michael Gende, and voluntarily decline coverage, and then John, I need your signature right here and today's date. John's going to say to you, well, why do I need to fill this out? Well, John, the reason why is many times somebody will decline coverage of a policy, and then they end up in the hospital, and they get this huge hospital bill, and their kids come to me and say, hey, you've been their agent for all these years. Why don't you protect them? We shouldn't have a big bill like this. And now I'm able to pull out the declination of coverage form and say, no, I tried to get your father to buy it. I tried to get your mother to buy it, but they declined coverage. So it protects me, John. But also what it does, too, if you're hesitant about signing this, let's talk about this plan a little bit more, because obviously you're understanding that, hey, maybe you should have this coverage. So what it does, you guys, it not only protects you, which is so important, and again, you don't have to keep the paper form, take a picture of it and store it in the cloud, but more importantly, it also gives you one more chance to try to close that particular deal. All right. I want to talk about cancer for just 3 minutes, and you guys will be happy that I did. We already know how often people get cancer. 1 out of every 2 men, 1 out of every 3 women. We all know that there is cancer insurance available. We sell a great plan, a cancer plan. So a client, if they have no cancer coverage, just regular health insurance, they're going to have to pay for their drugs. So if they go through radiation or chemotherapy, $50,000 worth, which happens in a heartbeat, they have a 20% copay, they would be responsible for $10,000. And even if they have a maximum out-of-pocket expense, say of $6,700, they'd be responsible for that. But it might be double that, because if their treatment goes from December to January, they would have 2 out-of-pockets, maximum out-of-pockets. And you can get, at age 65, $10,000 worth of cancer coverage for $31 per month. So affordable versus having to come up with $10,000, which will destroy most people financially. All right. One of the reasons why people don't sell cancer insurance is they don't know quite how, they're not comfortable with how to bring it up. Here's the way that you bring it up. You say, who do you have your cancer insurance with? All right. Say that to every one of your clients. And I'm going to show you again. Next screen you're going to want to take a picture of. Here's how our plan works. Age 18 to 65, they can get up to $75,000 worth of coverage. Age 66 to 90, if they're just buying the plan, they can get $50,000 worth of coverage. It's issue age, so whatever age they are when they buy it, that premium is locked in at that amount unless we have a rate increase over the whole over the whole zone, over the entire age group, which, as you know, you can't get that rate increase unless that particular state Department of Insurance approves it based upon the performance of that block of business. All right, here's something that I want you to understand, and that is this. Nobody gets up in the morning and says, hey, I'm going to, it's Thursday, I'm going to go get, go do a little shopping, then I'm going to the health club, then I'm going to get my hair cut, and then I'm going to stop and buy cancer insurance. Never has been said ever in the history of the world, okay? Cancer insurance gets sold only when one thing happens, typically, and that is when one of you guys, and when I say guys, you guys know that I mean guys and gals, when one of you guys offers it to your client. And when you do offer it and they buy it, you have protected them, and you have done such a wonderful, miraculous thing by providing your client with that. Here's how you sell it. Super easy, okay? All right, I want to get to this screen right here. All right, I suggest everybody take a picture of this. Here's the word track that you use. With every one of your clients, at some point you say to them, hey, Bill, who do you have your cancer insurance with? And then Bill's going to say, I don't have any cancer insurance. And then you're going to say, well, who do you know that's had experience dealing with cancer? And Bill's going to come up with somebody who's close, that's close to him. It might be a parent. Oh, you know what? My mom had cancer for 15 years. Eventually, she passed away from it, but she battled it for a long time and had a good life. Sorry to hear that. Is it okay if I ask you about that? Yeah, go right ahead. Please tell me what your mom went through. Because what I'm doing right now with this line of questioning, and I'm doing it in a conversational tone, is I'm getting the client talking about the cancer experience that his mom had, or his best friend or neighbor, whatever it may be. Because what they're doing is they're doing our job for us. They are selling themselves on the need for cancer insurance, but you have to guide them. And then you say, did your mom have to have chemotherapy? Yes, she did. What was that like? Did she have to have radiation? What was that like? Tell me about that. Did she have to have surgery? She did. Tell me a little bit about that. How did that affect her? And then when you're ready to start wrapping it up and coming back around and going in for the close, how did all of that, how did your mom having cancer and battling it for 15 years, how did that all affect your mom and dad financially? Oh my gosh, it was terrible. They ended up having to sell this little lake house that we all grew up in and spent the summers on because of all the money that they were spending. Now, here's what you do. You know, Bob, based on everything you've told me, I feel that I'm absolutely obligated to share with you this cancer plan that we have that would have paid your mom $75,000 if she had it. Let me ask you this. How much of a difference would a check for $75,000 tax-free have made to them as far as alleviating their financial stress? Oh, my gosh, it would have made all the difference in the world. All right, let me show you how this plan works. There you go. And I'm telling you, memorize these. It will make a big difference. All right, with that in mind, we're short on time, so we're not going to show you any more closes. Here's something that I do want everybody to write down. This is our sales support number, 800-323-6907. This is who you call when you have questions about what's covered on a policy, or you need materials from us. We will get them sent out to you right away. Here is my information. This 847 number, that's a direct line straight into my office. But now, something more importantly, if everybody would write down this number, and it is 800-842-7799. 800-842-7799. That is the number for GoldenCare, okay? If you would like to get contracted to be able to sell our products, and we would love for you to do that, you need to get contracted through GoldenCare by calling 800-842-7799. And with that, my last tip, and that is that I challenge all of you to spend the next 3 months acting fearlessly. And what I mean by that is don't let fear cripple you. If you're thinking about whether I should knock on that door, should I call that client, should I go for the additional sale, the answer is yes. The only thing holding you back is fear, so act fearlessly. And with that, I'll turn it back over to Jen. It's all yours. my dear.
All right, thank you. I did get one more question. I know you said on the cancer one that's a tax-free benefit. Does that also apply to the home health care and the critical cash when they receive those benefits?
It does, because it's an insurance. It's a pre-negotiated insurance settlement, so yes.
Perfect. That was the only additional question I had. Otherwise, I want to thank you so much, Michael, for coming and sharing your knowledge with us this morning and this afternoon. So once again, thank you so much, and thank you everyone that attended here today.
Thank you, and everybody have a great day.